Okay, everybody, welcome back to another video with JoeWtrades. I might be a little delirious right now, just because for the past 7 days I've been trying to implement this system. I've been up, I haven't really slept. I remember the second day I did 14 hours with maybe a lunch or two in between, and the lunch wasn't that great because I was eating ice cream, right? So I've implemented these indicators, my strategy, personal strategies, and thrown in proven strategies to have the most accurate win rate possible, right? I'm going with dedicated strategies that have been around for over 15, 20 years. I'm going with my own personal strategies, trying to implement these into indicators and trying to figure out the formulas and the math behind it with the variables to create the base codex. So I hope you guys are ready for this video. Let's get right into the first indicator. Alright guys, so right now what you're going to do is we're going to go head over to TradingView. We're going to pull up your chart, okay? All these indicators and strategies that I've created into these robust indicators work on all your stocks, ETFs, cryptos, etc. They're going to be best with your 15-minute time frame. I've mastered them and I have tailored them to fit that want and need for the swing trade. I promote swing trading. I want more success rates for you guys, so it's going to be a swing trade. So what we're going to do right now, we're going to head up over to indicators right over here. Okay, we're going to click this indicator chart and we're going to search, let's see, we're going to search JoeWtrades, etc. So you're going to go down and to find these, yes, these are invite only. These are premium indicators. We are going to go over the first indicator. This one is a standalone. It's been back tested. It's very, very good. So let's do some settings. Let's adjust the settings for this first indicator. We are going to take out, let me see, the style of visibility. I do not want signals. I do not want signals, and I don't want trades on the chart, okay? With this indicator, this one took me, actually, it looks very, when you see the other indicators, they look so complex. This one was actually more mathematical dated, right? So if you guys have followed me on TradingView and you see some of the posts that I have on TradingView SPY Road to 615, if you can see my green 610 to 615. Wow. So I mathematically implemented this so you guys can see the targets where I've come up, where I've put the codex to come up with that. So you guys have seen, right, for the past 10 days now, I've had road to 615. So, and then if you pull up my chart, we're on the 15-minute. Guess what, guys? This green line is going to show us where the target is. It's a very, very unique indicator. These are JoeWtrade indicators, guys. And you see 618, right? So 609, 618 couldn't get it completely perfect, but the tailored is I'm coming for 615. And when I'm in a swing trade, I get a lot of people, guys. I get a lot of people that put spam in some of the comments. They get very aggravated. Oh, it's the bear market. It's going down, yada, yada. They say so much stuff. I don't even want to bring them up in the comment section right now. But it's like, okay. We know 665, right? So these are zones that we need to watch out for. Guess what, guys? That's a danger zone. That's a danger zone. And for me to calculate that, guess what? On this indicator, there's 568. These are my personal assessments with analyzing, trying to put them into the indicator. So this one is really I'm proud of, right? For as simple as it is, because I'll explain how this would work. So if you were in a trade, in this swing trade, and we're bullish and we're figuring out what we want to do, I would literally be looking for this guy. I'd be looking for the green, right? These are the targets. This is when I would be ready to take profit and exit my strategy, right? And exactly how I have implemented it. This is more of my stop loss. Like I will pick up, I will add around the 576. I'll add around the 570, but this is the point where if 568 hits, I know that's like we'd want to just buy. Something seriously wrong with the market in the correction. If it's going to go even lower, consolidate there for a while, etc. So I made a video, I want to say a week ago, when I was talking about how to be successful in 2025, and me figuring this out and basing that as well. I want to call this the stop loss indicator, right? I've indicated that the stop loss is more for the futures market. When I was talking about this, traders usually come to me and say, hey, Joe, what should I do? My stop loss, I'm always getting stopped out, and the market continues to go in the direction where I was if I was in a long or a short. So then I told them, well, we need to figure out, it's not like an ADX, but it's more of a formula where you figure out like a liquidity, and it's not a support, but it's more like the liquidity area and that demand, where you would lower that stop loss to that point, right? So theoretically, what we want to do is take our longs where our stop loss would be, versus when we get in the market, when we do our pre-assessments and analytics in there, we get inside the market, and when we take the stop loss, that's when we're usually out of the market. But in this strategy, we're taking the long where the stop loss is, right? That's more for a day trade. I feel that to be extremely safe because it cuts your losses. If you are wrong or you're not right for the day and there is a liquidity sweep, you're going to make a lot of money, right? Especially if it goes in your favor. If it doesn't go in your favor already, it was already going past the stop loss and you're entering at the stop loss, you're stopped out, right? Does that theoretically make sense? This is where this came for the motivation to make this indicator. I'm going to call it the stop loss indicator. This is exactly 568. This is where I'd be extreme cautiously letting go of my positions, actually, because that would be a huge sign to me of a bear market. I would be out of it. So I don't trade this. We're not going to trade this red underneath it as more of a notion. It's more of a cautious for SPY anyways, right? For the ETF SPY, because when I was tailoring this, I was figuring out from a couple of, it's the mathematical equations how I equivalent to the ETF. Now let me explain. If we use this strategy on like Tesla, completely different outlook, right? All right, so if I bring up Tesla, now we're in a standard stock. No. I will buy, short, etc. Right? If it's underneath the zone, we're gonna short the red. It's completely easy. Just like if we go above the green, we can start taking profits. The way I have this set up, the green is more of a take profit. You'll really never see the stock run above the green. The green's more of to get out of the market, right? If I've been trailing in the position, if it's touching green, take profit. And with Tesla, I mean, we have our moving averages, the blue line. If we're underneath the moving average, you can take the short. It's common sense, right? And if we're underneath the red line and the moving average, that's like a double whammy. It's like a 90% favorability to the downside. So just exactly how would we look at this, right? So let's just say we have the moving average, right? It's at 474, and we have my unique identification, how I've come up with this formula for my red line. And the moving average crossed underneath it. Forget it, guys. It is a short from here, and plus we were already a red in the red zone. That's it. We're taking the short. Works perfectly if you want to do calls and shorts with stocks. With ETFs, like the SPY, I don't recommend it because 568, in my opinion, is a very cautious low zone, and we need to be worried about what's going on, why it's there. And let's bring this up for you guys again. Let's get there. That is a huge distance, right? So we're at 592. Do you know what I mean? To come down to 576, the way I had formulated this, to actually run with SPY, because I trade SPY a lot. That's a huge difference. 592 to 568, that's a big amount of money, especially if you're in a short swing day trade that expires in 7 days. That's a dramatic difference. But I'm always in months, 2-3 months out. So I'm going for the most common folk out there. So simplify how this would work. If we ever fell behind the red on an ETF, I would cautiously exit the position. If we fall under the red with a stock like a Tesla, Nvidia, that's a short. It's an easy short. I'm not, and especially over the moving average, if it goes down. This would be like, this indication right here is something is heavily wrong with the stock market, right? If we're seeing something like this, there's just something wrong, and we got to figure out what's going on at 605 to 581. That's a big move, guys, and in a very fast. What is that? December 18th all the way to in 2 days, guys. That's a drastic move. So that is a caution zone where I would exit the market temporarily and figure out what I'm going to do with my position. I would not mess around with SPY, because this can wipe out your accounts. And I know a lot of people over the years, they get wiped out from SPY. It's no joke. 2 days to make this drastic move, and then it sweeps the liquidity and goes up. That's pretty much exactly how I try to formulate this indicator. With certain stocks like Tesla, Nvidia, I'm gonna emphasize it again. These are easier shorts to get into the positions and hold them, because I think most people, when they're trading like a Tesla or a Nvidia, or they're going like a Palantir, a long or a short, I hope you guys at least have them 45 days out, right? It's more cost effective. People can afford those, but with SPY, you have to have a lot of money, right? When you're doing 3-month out contracts, it's pretty pricey versus Tesla and all these other ones that are smaller, smaller stocks. So to simplify this green would be take profit. This red would be a stop loss as a warning to maybe exit the market completely and wait for it to consolidate back over the red line for the ETF. Okay, you could short. Okay, because if you see here, theoretically, it just dropped, but that's crazy. That's just a very bad drop. You could, but SPY is the most trickiest psychological ETF out there. It destroys professionals. You can short stocks with this, right? So if it falls under the moving average, the moving average falls under the red line, continue to take the short. This is in a downturn. You can short the stocks. These are much easier, but with SPY, this would be a cautionary zone for me of the whole market is in trouble. All right, now that we've gone over this indicator, let's go over the second indicator. So we're going to go up to our indications charts, okay? We are going to go, which one do I want to do? This one is complicated. So we're going to do the complete, yeah, guys, it looks really cool. You got this personal stamp. This is no joke. This one took a while, but after I was able to get the coding and everything down, look at that, guys. You'll always have the JoeWtrades live trading in progress, the GOAT, right? All right, so let's explain exactly how this indicator works and the preferences and how to use it. So we have a lot of buy and sell signals, okay? I'm using proven indicators with this, right? We have the Fibonacci retracement. We have your classic RSI, Bollinger. We have a lot, right? EMAs, moving averages, etc. So let's go up to the settings. So one thing I really don't like, you see we have horizontal and we have vertical, right? We have the lines going straight down, we have the lines going across. These are indications of buy and sell. Very simple how I've done them. So let me see. So if it is too complex, you can go straight to your settings. We can go to the buy background or the sell background. What this is telling you, simplified, if you feel like you are watching a short in a stock and you don't really care about longs, you can keep the sell on, right? So you'll know right here, the sell background popped up. You have the sell sign popping up. The stock went down drastically. So it is highly accurate. And the Fibonacci levels right here, they tell you the probability and the effects of actually getting into, let me see, actually hitting your price targets, right? So for the Fibonacci right here, we're looking, we have the retracements, and we have our downtrends all the way to the 589 as high as the 595, right? And these are usually met within the day. These can be usually done within the day or 2 or 3 days. This can swing this low, and this can swing theoretically this high. Is it 100% accurate? No, but it's the Fibonacci retracement, and it is very, the settings that I have on there I think are a little advanced, maybe not as, as the classic retailers, right? And for me to explain really how this works, this Fibonacci part is a little bit complex, right? Let me explain. Usually here in green, these are your buy zones, right? Because Fibonacci uses support, resistance, demand, etc. It's a very complex support and resistance, right? So in theory, when we're running in this side of the factor, we have already turned this green. So this should stay green, but we are in this channel. This should be red, in my opinion, because this is where the sell-off occurs. We're not really breaking in here. This is up to my tailorness, right? This is going to be up to my strategy if I want to change this color to red, right? If I want to change all these to red, because it's just letting you know, or anything higher than where the actual price is, to call it the price. If I want to change it to red and below is green, etc. Because 90% of the traders that are watching me right now, the Fibonacci retracement is extremely complex. It can take you a good few months to just try to understand it. So if I simplify it enough, right, and keeping it in good notion to tailor it to a beginner, like if I just turn these green just to say this is a buy zone theoretically and this is the sell zone until we break out, because usually that's how it happens. You flip the support till it becomes resistance, etc. This can be a little bit confusing right now, because when you see this, we're breaking into it, shows a buy, right? And the possibility of going up to the 595. But we all know we can have a few tops, triple tops, and then move right back to the downside. So I feel this area, I could tailor it in the future, and I will as adjustments are needed. I can turn this red so you guys know until this, and then program it when we are actually in it, kind of like how we are now, it turns green. When we're below it, the price, it turns red, right? That's how that would be pretty accurate for you guys. We have very powerful sell signals here. So if you get a sell signal and you have the red background, that's a very good indication. There's a lot of volume, there's a lot of sell indication, there's a lot of RSI pressure, everything to the downside for all these indications to turn on. And as you can see, when the signal came on, it did dip, right? It did go to 589, causing people to get scared because we had a gap up from the morning, right? And I think this is all designed to scare people and throw them out of the market. Going back, we have the moving averages, we have a moving average and an EMA, and we have RSI, all tied into this complete, in my opinion, very, very complete indicator. You'll have your buy and sell signals, right? You'll have very powerful buy and sell signals. This one, you'll get the sell signal, it shows the crash, right? It shows a crash. And you have a buy signal, it will show a rocket. When you get enough buying, I can tailor this and move this up just to help people notion that you are going on an upward trend, right? This is very good tool for swing trading, guys. And if it is, and if you don't like all the background noise, right, which you can do, you can go to settings and we can take off this on buy, right? We can keep it like that, and then it becomes a little bit more less complex, right? But I feel like if I was in a long right now, I would really want to know because a lot of you have emotions, and we all do, and we get out of the market, I would probably keep the buy if I was in a long, right? I would want to see all my buying opportunities. I would want to see where the market, where this indicator told me to buy, and I want to see. And another really good indication of the indicator, and let me explain to you, this is powerful, right? When we have price above all the moving averages, right, and the EMA and the trailing, it is a very good thing. But when you see, okay, when you see the blue flip above everything, just know this. Keep it very, very simple. Very, very simple. When the blue is above, you're going down. Okay? Keep that in mind, guys. When the blue line is above the red and the green, you're going down. So this is why you see the green background is telling you guys to buy right here. It could be deceiving. So that's why I said we can turn it off. The best notion to really understand my my indicator, I'm going to continue to short. The blue is on top. I will probably release my short when the blue crosses back over, okay? When the blue crosses right back over. So when the blue starts to go under the green and under the red, keep this. This is a powerful, very powerful tool. And then the fib is here as well. So the fib's always going to be here, guys. As you can see, this was resistance till broken above for support until it tries to attempt to break it, right? Until we go in here and then we get the sell off. That's exactly how I think the formulation should be. We broke into here. This was all buying. It was all buying. We broke all the way up to the Fibonacci lines. But another way to look at it is these are just, it's off of a percentage. The Fibonacci, how they measure it is, it's a very complex angle, and that's pretty much how you get it. Just know that these are your price zones. That's the best way to really look at it. So if you were unsure of the market right now, this is a complete easy long. Very, very easy long at the moment because we have the moving averages, the EMAs, we have the blue line underneath the red and the green indicating a long, right? We still have some movement to the upside indications here with the Fibonacci showing you it could test the 598 to continue higher. When the blue starts to cross above the red and the green, that's when you would want to exit the long, theoretically. Okay, we'll be coming on and I'll be doing more adjustments to this and going over that indicator as well, because this is a complex one. I'm going to figure out other mathematications, right, to add into this to make this less simple. I will still use the calculations and things, maybe adjust them, take some of these blocks off and get a little bit more accurate readings, but this is pretty accurate. This is as technical as it gets, guys. This is as professional as it gets, understanding how this chart works, right? Your EMAs, your moving averages, and the Fibonacci's. Okay, so let's go on to the next indicator. Our next indicator is going to come with a one of two. It's the trend with signals. This is very, very big as well. So I've simplified this. This is actually one of my favorite ones. Yep, you're going to see it, guys. I'm going to go JoeWtrades live trading in progress. You're going to see that go all day long. So this is actually going to tell you when to short, because you're going to see a right, like a crash. This is very simplified on the 15-minute chart. The crash is going to enable you guys to short, right? The rocket is going to notify you guys to go long, to start your long. So right here, you would have known if the rocket appeared right about 579, you would have known to go long at 592. This is a very, very, very good, gives you percentages. And look at JoeWtrades, you'll get that notification once that's as much as I can be there with you guys without actually being there with you guys, right? So you'll get the crash, you'll get my notification, JoeWtrades, time to exit, little mathematical basis right there, and give you the percentage and etc. and where we could go. 579, it's calculating, right? This move is right here at 579. Where did it go? 575, whatever. That's damn pretty good, probable. Okay, and then the rocket comes. Time to go to the moon. Enter, right? JoeWtrade. Right back up to the go. But let's set on the second indicator, 1 of 2, to really show notions. This is a very popular. Now you're like, Joe, you throw all these scribbles on the goddamn chart. What are we going to do? This is as professional as it gets, guys. So using these indicators, you're going to have your moving averages. We're going to have all the moving averages in here. I have my EMAs, my SMAs, my RSIs, everything, and the Bollingers, right? I've created Bollinger Bands as well. It's very easy. Green is the upper trend and red is the lower trend. The red and the green that you can see are Bollinger Bands right here. The other two are just regular movie, like, all right, we're back. Bollinger Bands, pretty self-explanatory. This is more of a swing trade when you're like, you don't want to wake up at 6 o'clock in the morning. You want to just enjoy the rest of your day, right, and not have to stress. Whenever you get these signals, whenever you get that on the 15-minute time frame, short. Whenever you get the rocket, long. Very, very easy indicator that I made. You would have went long here, 591, right, all the way to 599. And then we've already discussed other ways to identify anytime the blue, right, anytime the blue line that I have it starts to triple, you can start taking effect and entering into the short. So this indicator gave you the short around 590. That gives you good confirmation to go short, right? You're roughly around 590, but if you would have read my chart properly, you would have got in at 590. Let's see. Yeah, you could have got in, it crossed here. You could have gotten around 595. It has already crossed to the downside. So once the blue crosses the green and it starts to triple up, you would have known really about right here. You got to start getting in depth. If you pay attention, you'll start to catch really good gains. So you could have got into the market early. 595, 597 would have been the switch to get in. This would have given you even more confirmation to let you know, hey, we're going to be in a downtrend for a minute. So if you would have caught the high, right, if you would have caught the 595, and then right about here, you got the short at 591, I wouldn't take profit at that. I mean, I would take profit, but I won't take profit because I know I'm going for a ride to the downside. And from that, you're going, well, I don't even know, guys, what, 578. Holy shit, that would have been a lot of money, right? That would have been a lot of money. So how would I have known, Joe, to, let's see, we want to, let me see if I could find a good indication. So we're down here, yeah. Let's go down here, down to the red, blue scup. No really good indication to go long until here, right? Looking at the EMAs, it was 591. You got to just an indication to go long for the trend. An indication to have gotten out of your, let me explain something, out of your trade, the Bollinger Band. It's very complex. This helps. So you see how the price went above the Bollinger Band fast? That's too abrupt. That's like take profit, sell, or get out of your position, because look what happens. It goes back into the Bollinger Band and then it dumps, right? And any time in theory that it goes under the Bollinger Band, that is going to cause a downtrend. It is going to cause a downtrend all the way down, especially if we're looking at the moving averages. That's it. It is on top of everything, writing it down. Now to where we're at right now, the moving average is underneath everything, right? It's underneath, so it's going back up. All right, pretty self-explanatory. Let's go on to the next indicator, guys. All right, guys, I hope you liked my video with JoeWtrades going over my 4 hot personal exclusive indicators that are out in the market right now. You can find them on TradingView. You can search JoeWtrades Trend with Signals 1 of 2, JoeWtrades Trend with Signals 2 of 2. Those are a combination of the two. They're stacked together. The other one is the Fibonacci buy and sell complete. All right. You'll search JoeWtrades Fibonacci complete, and that is the complete. That has everything, EMAs, pretty much all of it, guys. And then you can search, this is the one, this is the JoeWtrades trend, right? We don't really want to think of it as the trend. Let me exit these out. This is more in the favorability of the stop loss, right? Because how I formulate it, you know, in majority of the times you can pick up a SPY right here, because in theory, if it breaks, it's very catastrophic. If it does not break, you're gonna go long in here in this area, and you could short it if the blue line falls under the red. Then it's a straight short. If the blue line falls under the red line, it's a short, guys, all the way down. But until it does fall below the red line, it's a long. And this is always the take profit, the green. Very, very, very good indicators, guys. Like and subscribe. Follow JoeWtrades, professional trader, indicator, creator. Jesus Christ, guys. Poker player. Ay. All right. I'm so tired. You can see the eyes. It's 10 o'clock at night. I've been up for a whole week. It's time for me to get some sleep, guys. Good night.